Google, we notice Alphabet is actually a fair amount weaker in the short run. You notice that, we're nowhere near these prior lows. And we mentioned this, last month on the call. This would be the level we need to get above, which is right near 125. So we've seen a little bit of a bounce attempt that's largely failed. Tech in general, when you take a look at the short run, it's been very choppy. So good news is this actually made the lows for the year back in May. So Alphabet, along with many of the other so-called FANG stocks, have held up a lot better than other areas such as energy, which has really been hard hit in recent months. Industrials and finance, some of the other retail stocks and discretionary really had rolled over very sharply, whereas technology had held up. Some of that you can chalk up to rates pulling back a little bit, but it's approaching sort of what I think is going to be a key spot on the downside, which really lies near these former lows. And so that really is anywhere from 105 or so to really 105 to 106 is going to be important, only about $1 lower. But I have to tell you, if the market's going to have a little bit of consolidation in the next week or two, this looks to me like it might very well break. So under 105, there really is nothing until right near 101.88. That's the area that if it's tested again, given the choppiness of this pattern, it probably does not hold. It probably does briefly undercut, but it could hold, for short term, a couple of days. In general, these choppy waves, very lots of overlap, often do lead to a final pullback. So I'm not as optimistic about Alphabet in the short run. Certainly in the bigger scheme of things, a wonderful company. It really has not, it's held up extraordinarily well. If you look at the larger pattern just since the 2020 lows, and we've shown this before, that many of these stocks really tend to hold like clockwork, right near levels, right near its 50-day retracement, not 50-day, the 50% retracement of prior low to high ranges going back over the last couple of years. So, that hit near 101.88, that's almost an exact direct hit for, that 50% retracement. These are things one should always, find as long-term as you can in terms of price history. Get in the habit of starting to draw, retracements between low to high, high to low, to really figure out key Fibonacci levels, as well as important 50% retracements, which are not Fibonacci per se, but are always extremely important.